Hi and welcome to this episode of Fairmont Rainmakers. Today we will talk about focus on the upside and protect the downside. We'll talk about making money and the importance of making money when you buy. You also, of course you make money when you sell, but buying is so important to learn how to buy, to enter into a deal. So we will talk about that. Now we will talk about the small deals and big deals. To do big deals is hard, but it's possible. So we will talk about what it takes to do big deals. We'll talk about the bear markets and the bull markets, why it is very important that you are bullish in your life. We will talk about why so many people is not bullish. They are scared. Why that happens? We'll talk about how to raise your standards, and in conclusion, we will talk about why it is possible to be successful, but it is difficult, and that's the reason why so many people is not successful, because it is difficult. And if you have high standards, you need to pay a price, and the price is high. So, well, let's start. Why do you need to focus on the upside and protect the downside? Most people, they are only protecting the downside. Everyone is just has a job. Everyone you just work 9 to 5. Saturdays and that's about it. You live your life like that. If you make a lot of money, that's good, because it's about the money. It's not about your job. It's about how much money you make. Of course, it's better if you have a job and you make a lot of money than if you are in business and you are breaking even, or you're losing, or you're making less than what you will make in a job. So remember, it's not about having a business. It's about making money. It's about making money. It's not about doing just what you love and the money will follow. It's not about. You need to you need to make money, and then you will have the time to do what you love. Because I think it should be kind of the opposite. You get the money, and then what you love will follow you. Because it's easier. If you have a lot of money, you can do what you love. You can do what you like. Charities, billionaires, they have a lot of charities. That's what they like. They like to do that. They build museums, and they call the museums in their names. Because they can do it. They can do it. They have the biggest charities are the charities of the billionaires, because they got the money first, and then they started to do what they love. And everyone, yes, is nice to give, but you need to get as well. If you don't have money, you cannot give any money to anyone. You need to get the money first. And to do that, of course, you need to add value. You need to add value. Now, when you enter into an investment, when you enter into a deal, it is very important to protect the downside, but you need to focus on the upside. If you don't, you won't do any deal. You will do 0 deals, because you are not bullish. You are scared. You are scared that you will lose. You are scared that something will go wrong. And you need to protect the downside. That's important. But most people, they are just protecting the downside, and they never do anything. They are in a scared mode. They're just playing not to lose. You need to play to win. You need to protect the downside, but you need to play to win. That's why people that makes like hundreds of millions and billions, they are playing to win. They protect the downside, but they play to win. All the time. All the time. I mean, just think about it. All the time they're running, they're expanding, they're opening stores, they're opening new businesses, they're acquiring businesses, they're bullish all the time. All the time. They invest in marketing, branding, like they are just bullish all the time. So in your life, you need to focus on the upside. You need to protect the downside, but you need to focus on the upside. The thing is that the upside is I mean, how much money can you make? How much money it is possible to make? How much? It is possible to make a lot. I mean, really, if you make 20 million, do you think the world, like globally, do you think everyone will know you if you're worth 20 million? No. You won't even be in Forbes. You won't even be in the rich list. I mean, you will be rich, but you won't be everywhere for sure, unless you're doing something where maybe your personal brand is big. But I mean, financially, in the financial world, you won't be that big. You won't be that big. I mean, if you are competing in a deal, if you are worth 20 million and you're competing in a deal with Blackstone or BlackRock or Starlum funds, they will kill you, man, because you don't have enough to compete in big deals. So now let's talk about big deals. I mean, big deals. There are deals that are billions. There are deals that are hundreds of millions, tens of millions. I mean, a big deal depends on what do you think a big deal is. Now, if you're starting, you won't do a big deal like 100 million deal or a billion deal. It is possible, but not when you start. I mean, it is possible to do it when you start, but it's very difficult. So it's better to start with small deals. If you don't have any money, if you're broke, if you're just starting and just, I mean, maybe you have a job or something, maybe trade deals, maybe be a broker and just trade deals. I mean, that's what we teach. We teach if you don't have money, you start trading. But we also teach that to enter and exit investments if you have more money to invest. What's the best investment? Now, we talk a lot about high returns. Do you think that Trump or I mean, people that is making billions and hundreds of millions, do you think they're looking to make 5% a year? Or 10% a year, or 8% a year? I mean, they're looking to make money like 2, 3, 5 times the money. I mean, you need to understand that it's possible to do it. It's possible to make 20 times a return on investment. I mean, it is difficult, for sure, but it's possible. It's possible. Now, maybe you read already about LBOs. There is one example. There was a company called Gibson Greeting Cards. They used to publish greeting cards, and they had the rights of Garfield the cat. Now, they were subsidiary of RCA Corporation, a partner of NBC television network. And then there was a buyout shop called Westray that bought them in January 1982. Westray was co-founded by former Nixon and Ford Treasury Secretary William Simon. He paid 80 million. But Westray and the car company's management put up just 1 million of that and borrowed the rest. Now, did you know that you can buy a company with 1 million? I mean, a company that is worth 80 million, you can buy it with 1 million. Now, if you are used to the normal way of thinking, you think that you need to put 25 or 30% deposit to buy a property or a real estate, and then you will make 10% a year or 5% a year, and then in 20 years you will have your investment back. But yes, the real estate will increase in value, and yes, you will make money. I mean, it is a good investment, but I mean, 5-10% is not what you want, what you really want. Now, they put 1 million. With so little equity, they didn't have much to lose if the company failed, but it stood to make many times their money if they sold out at a higher price. Now, if you think about it, not a lot of people will put the million if that's the case, because, of course, if you're entering into a deal where you can make a lot of money, there is a risk. There is a risk. So, of course, you need to know what you're doing. It's very important. Now, 16 months later, after selling off Gibson Greetings Real Estate, Westray and the management took the company public in a stock offering that valued it at 290 million. So, from 80 million, and they put 1 million. They did an IPO, and the company was worth 290 million. In how long? 16 months. Now, without leverage, another term of debt, they would have made roughly 3.5 times their money. So 80 and 290 million. That's like 210 million profit. Without, if they paid even if they paid the 80 million in cash, it was a good investment. But they put 1 million in cash. 1 million. So with the extraordinary ratio of debt in the original deal, Simon and his Westray partner Raymond Chambers each made more than 65 million on their respective 330,000 investments, a 200-fold profit. 200 times, man. So it is possible. But of course, do you think that if you just go and look for a deal like this, you will find the deal? I mean, you need to know how to do it, but it is possible. Is this the first deal that you can do? No, I don't think. I mean, it's very difficult for someone that is starting to do a deal like this. But it's just an example of what is possible. Remember, if you want to do anything in life, you need to think that if someone else did whatever anyone else did, you can do as well. Why not? Why not? The only reason why you think you cannot do it is because you have low self-esteem, but that's not the reality. You can do anything. Anything that other person did, you can do as well. You can do as well. Now, 200 times the investment. Actually, they put 1 million, and the profit was 210 million. So it's just such a good investment. Well, their phenomenal gain instantly became a legend. Weeks after, New York Times Magazine and the New York Times were still dissecting Westray's coup. The thing is that this is a leveraged buyout. There's a good movie about it. It's called Barbarians at the Gate. There is also a book about it. But we're talking about this so that you understand that it's possible to do deals where you can double your money. I mean, we're not talking about 200 times your money. We're saying you can do a deal where you can double your money. I mean, if you double your money every year, if you make 50% a year, 50% a year, I mean, starting with not that much. I mean, just do the numbers. I mean, do the numbers. Start with 10K, 50% a year. Do it for 50 years and see how much you get. Now, to do big deals and to even think about these kind of deals, you need to have like courage, a lot of courage, because first you need to have a target, a goal that is big, and you don't need to dream. Dreaming is like just imagining, just fucking doing a vision board, or just fucking thinking that you can get some shit. Like, you need to dream. You need to have goals and targets and a plan, and you need to act every day. You need to do something every day to accomplish that. That's very important. Very important. Because just setting goals, just setting targets is not enough. It's not enough. Now, it is very important that you accomplish the shit that you want to accomplish. So never set targets that are not achievable with the deadline. I mean, everything, well, almost everything can be achievable. Well, in money, yes. I mean, you can make any amount that you want. I mean, Jeff Bezos, he's worth, well, 150 billion. With his divorce, I think he's giving 25% of that, but he will still be the richest person on the planet. And he thinks small. Like, of course, he has a big vision, but he thinks in the details. He thinks about the details. You need to think about the details, because if you don't think about the details, like every day you need to do something. Every day you need to do to give one step. Every day. And then you need to accomplish something every day. And then you will gain momentum. And then if you do that every day, you will accomplish something. I mean, in financially, if you don't have maybe 50K or even 10K, you don't have 10K, you need to work towards that. When you have the 10K, then you keep it, and you make another, you put another target. Now you want 20, or now you want 50. Then you get the 50. Then you put another target. You want 100. Then you get the 100. Then you want 1,000,000. Then you get the 1,000,000. You start also doing investments. I don't think you should invest all your cash for sure, but you should invest 50% in like good deals. You should also put a smaller percentage in deals, like the deal that we talked about, where you can make a lot of money. I mean, it's more risky. It can be a bit more risky if you don't know exactly how everything works. I mean, for sure, don't do it if you don't know what you're doing. You need to learn. But those kind of deals are a bit more risky, but the profit can be so much that it's worth to take the risk. But you shouldn't put all your money there, or you can also raise the money for that. And you can put your money as well, but not everything. So I think the majority, maybe 40%, if you're investing 60%, you can put, let's say you invest 60% of the cash, you can put 40% in things that are more safe, like real estate, just real estate deals, where you maybe are just buying to buy to let, or deals that are below market value. You do some works in the real estate, and then maybe you refinance and keep it. So you can do, well, we talk about a lot of strategies, real estate strategies in our training. We'll do some episodes about different strategies in real estate as well. But so 40% you can put in that. You can put in deals that are more safe, we can say. Long term, you want to keep the real estate. You want to buy, in the US, multifamily is good. The UK, then you have HMOs. You can, if you have $1 million in cash, 40%, 400K, you can do a small development deal. You can sell part of it. You can refinance the rest. You can keep it, rent it, and then you can keep doing deals like that. That's safe. That's quite safe. Of course, never. You need to. I think it is important to pay a capital and interest when you are financing real estate, because things. Well, about 2008. That shit happens. So it's not good to have a lot of debt in the real estate, because if you have, let's say you have 75% debt in your real estate, if the value of the real estate depreciates like 50%, if you have a 10 million portfolio and you owe 7.5 million, but then the real estate value is now 5 million, the bank can call the loans and can tell you, I want my money. So they want 7.5, but your real estate is worth 5. So you lose everything. But if you have very low debt, if you have 40%, then you can then you win, because then you can keep it. This is your real estate. You don't want to sell it. If the bank tells you, I want my 4 million, you just get another bank to finance your real estate, and you keep it. The best is if you have like very, very little. But of course, it takes time to pay the real estate. But it is a good investment to have real estate and without debt as well. It is very important to know the balance between the finance that you have in the real estate and how much real estate you want to have. We'll talk about in business as well. If you're running a business, you need to be very careful with the finance. You need to make a lot of money. Cash flow is everything. You need to make way more money than what you spend. That's why a lot of, most businesses fail because of this. They think, oh well, people get business loans to set up a new business. You have no revenue, man. You have no revenue, and you're getting a business loan to set up a business. You need to get the money. You should first you should make money without investment, and then you have the money to do deals. And you shouldn't do big deals. You should do small deals with your money. If you're raising finance, then yes, it's fine. As long as you do due diligence and you know about the deals, you know when to exit. You know how everything works. Or if you have a JV partner that knows what they're doing, then yes, you can do other kind of deals. But yeah, you shouldn't do big deals when you start, because you don't want to you don't want to waste your time. You want money. So and small deals is a lot easier. You can get money, and the thing is that when you get money, you're more confident. So then you start to do more deals. You can do more bigger deals. Maybe you start to trade deals that are bigger as well if you're starting. Or you can do small. I mean, if you're closing deals and you have some cash saved, you can do small deals yourself as well. But yeah, just you need to remember Jeff Bezos says you need to do everything step by step. Don't jump and start small. That's very, very good advice. We like to study billionaires. We like to study people with like real money, like hundreds of millions and billions, because they know what they're doing. They know. They really have a mentality that, yes, it protects the downside, but they are very bullish. They focus on the upside all the time, and they don't waste time. That's why they win. Now, we'll talk about the bear market and the bull market. Now, well, if you know about finance or the stock market, then you know the meaning of bull market and bear market, but maybe some people won't know. So bull markets are defined by the market going up aggressively over a period of time. As the market starts to raise, there becomes more and more greed in the stock market. So everyone wants to buy because the market is going up. You see more and more people thinking, oh yeah, let's put money into the market because it's going up. So what causes a bull market? There are many factors that contribute to a bull market, but the two largest are usually a strong economy and high employment levels across the board. Now, so a bull market is just going up all the time, like until the bear market happens. So the bear market definition is exactly the opposite of a bull market. It's a market where quarter after quarter the market is moving down about 20%. That signals a bear market. And when that happens, people start to get really scared about putting money into the stock market. That's because they don't know how to invest. That is crazy. Well, you need to invest against the cycles. That's very important. That's one of the things that we teach. Like, you need to invest against the cycles. If the market is down, you need to buy. And you need to sell when you think, or when you need to use your gut feeling as well. You need to know when to exit, when to sell. Now, what is called a bear market? So a bear market is named for the way that this particular animal attacks its victims. A bear swipes downward during an attack, thus becoming a metaphor for market activity under these conditions. Now, what causes a bear market? Generally speaking, a bear market is one that is showing signs of a decline. Share prices are dropping to the point where seasoned investors believe that this trend will continue, at least for the foreseeable future. So, How long do bear markets last? That varies depending on the specific situation. Some can last for just several weeks, and others can last years. A cyclical bear market can even last several years depending on the contributing factors. So we saw this in 2008. Well, we see this usually it's every 10 years. I mean, now we have been in a bull market for a long time. But anyway, so we're just saying this because in the stock market, this is how it works. You have the bear markets and the bull markets. Now, in your life, you need to be bullish. The thing is that, yes, the stock market you cannot control because there are many factors that influence that. But you can control your life. And you can control your finances. So how can you be bullish? I mean, someone bullish is a salesperson that is calling all the time. Then you are bullish, man, because you're calling everyone all the time. Like, you're just contacting everyone. You're just getting money and closing deals all the time. Then you're bullish. If you're not bullish, your life will be a bear market. and the bear market is you're not contacting anyone. You're not dealing with your customers. You're not dealing with people. You're wasting your time. That's very bad, man. Don't do that because you want money. I mean, if you want to get money, you need to work. You need to close deals. You need to look for deals. You need to look for deals all the time. And the thing is that there are always deals. Always. Now, we were talking in an episode about what is more important, the money or the deals. Now, that is a topic that is very interesting, and of course it's both. You need both because if you have the money but you don't have deals, then, well, if you borrow from the bank, you need to pay interest. So if you don't have a deal, you're losing money. And if you have a deal, if you have a good deal and you don't get the money, someone else will take the deal because they have the money. So you need both. Now, why so many people is not bullish? Why so many? I mean, if you think about it, everyone that has money problems, they're not bullish. They're scared. They're scared. They don't want to take risks. They don't want to contact people. They don't want rejection because they care about what others think. They care that people won't like them or they can criticize them. But you don't need to give a fuck, man. You don't need to give a fuck. I mean, rejection is fine. I mean, rejection is good. It's good because when you get rejected, you're closer of closing. But you need to keep working. You need to keep contacting people. You need to be bullish. You need to keep looking for deals. You need to keep looking for money. You need to keep looking for finance. You need to keep looking. If you don't keep looking, then the people that is rejecting you, I mean, some people is normal because maybe they're not interested in your deal. Maybe it's not the right time. Maybe they're not prepared. Maybe they will buy later. Maybe they will never buy. But at least some people is polite. So yes, they're not interested, but it's not that they are doing it on purpose. They don't want you to feel bad. So that's fine. Now, there is people that has a shed life, a shed attitude, and and the way they deal with the shit that they have is putting the shit in other people. So they will try to make you feel bad, so they can reject you, and they will be rude. They can they can be rude, and then you don't need to let them win. So you need to keep looking for people. You need to keep looking for deals. You need to keep looking for clients. You need to keep looking for money until you win. Until you close, until you get more money. And then that's how you make yourself better. And that's a way of telling the people that has that shit attitude that you don't give a fuck about what they think or what they say or what their fucking problem is in life. You don't care about it. You don't care. You want to close, you want to get more customers, you want to increase your pipeline, increase your leads, and you want to keep working all the time. You want to keep adding value to the people that want your value. People that is just scared, they're scared, man. They're scared. Let them be scared. Let them be scared. It's not your problem. You want to work with people that want to close. You want to work with the buyers, with the people that is bullish. Now, this is the thing. To make a lot of money, you need to set the right goals. And to set the right goals, you need to raise your standards. To raise your standards, you need to have high self-esteem. So it is good to learn to improve yourself. You need to work on your mind, because your mind needs to be trained. Your mind, I mean, all your physical body as well. You need to work on your physical body. You need to work on your mind. You need to work on your emotions. You need to work on yourself all the time. You don't need to care what other people is doing or thinking or whatever. They're wasting their time. If you want to be successful, you need to work on yourself, in your mind, in your emotions, in your body. You need to exercise. You need to read. Well, if you want to read, you need to read and put in practice. Because if you read and you don't put it in practice, it's better not to read. I mean, you need to read the right things. I don't think you need to read a lot. You need to read. Maybe you read summaries, but put in practice what you read. That's way more important than just reading. Reading to read is stupid. It's very stupid. Now, to be successful is difficult. It's not easy, because look, when you see someone driving a nice car, like a nice car, a luxury car, you need to know all the shit that they went through to get that car. I mean, I'm not talking about old money. I'm talking about self-made. Self-made. I mean, we had to deal with a lot of shit, man. We have to deal with rejection to drive nice cars. Is how it is, man. You need to understand that you need to go through rejection after rejection after rejection after rejection to close, to do deals. And you need to keep looking for people, for clients, for investors, for deals, for money. You need to keep looking. And that's how you make money. That's how you make money. That's why in our training, we not only give you the information. We give you the information, but then we wait for you to do something. To do what we're telling you that works. Because if you're just reading, if you're just listening, and if you're not doing, you're wasting your time. And you're wasting your money if you're doing a course. Because, I mean, I think a course that lets you make money is the best investment that you can make. If you fucking put it in practice. Well, one, if the course is good, but two, if you put it in practice. Because if you do a course and you don't put it in practice, I mean, you're wasting your time and you're wasting your money. So don't do that shit. Don't be stupid. Put in practice what you learn. Put in practice what you learn. Now, I think to raise your standards, you need to think about the mind as... I mean, there is a book called The Power of the Subconscious Mind by Joseph Murphy. It talks about the subconscious mind, and it says that in the subconscious mind is like land that you plant seeds there, and the seeds are all the thoughts that you get, all the information. But if your life is not in the best way that it can be, if you're not the best that you can be yet, it's because you have a lot of beliefs that are not right. So you need to plant the right seeds in your subconscious mind, and you do that by getting around the right people, getting the right information, and practicing, like experience, because that's how you do it. You need to experience. Now, he puts an example of a guy that made his dream a reality, but the guy was imagining, and this is very interesting. Look, the guy was imagining that he was taken because his house was for sale, and then he imagined that he went to the house. The house sold for the right price, and he took the board and threw it away. And then that exactly happened. Now, it's very good if you imagine something like that, because I mean the guy put the house in the market, so there was people showing the house, and it was very realistic that was going to happen. But if you exercise with things like that will give you confidence. But if you fucking exercise that you imagine that you are fucking winning the lottery, you will become crazy, because you will never fucking win the lottery. I mean, are you stupid? Do you think that by doing a fucking imagining that it will happen? I mean, that's why you need to remember the law of cause and effect. Every cause has an effect, and you need to think about probability theory. I mean, the probability of winning the lottery is nothing, basically. It's nothing. So be very realistic. That's very, very important. I mean, you can do small exercises. I mean, if you well, in the course, if you are doing the course, then you can imagine that you are closing a deal and you're making like maybe 5,000, or even 3,000. Okay, you're making 3,000. That's very realistic. I mean, that's not difficult at all. And would you do that, you will have confidence. I mean, if you're really starting, like, everything that you make counts. And the thing is that it's not only about the money. It is about the money for sure, but it's not only about the money. It's about your confidence levels. Because when you close the first deal is the most difficult deal. When you close the first deal and you make whatever, I mean, yes, you should make over 1,000, 2,000 for sure. But yeah, let's say you make 1,000. I mean, that's the most difficult deal because it's the first deal. But then if you made that, you can go back to that memory and do it again. And then you just increase. You close a bigger deal. And then another one. And you keep going until you do big deals. Well, that's how Jeff Bezos became the richest guy in the world. Just by doing small things. Small things. Putting attention to detail. Like, he believes that when you tell a customer that you will do something and you do it, then the customer will trust you because you did what you said you will do. And that's Amazon. That's Amazon. They don't tell you will get the delivery tomorrow and you get it in a fucking week. That's not Amazon, man. Amazon will tell you will get it in 3 days, but you get it in 1 day. So that's very important in goal setting. Just set, like, your vision should be massive. Like, yes, I think and everyone should aim to make 20 million at least in your lifetime. But you need to do it in small steps. You need to take small steps every day. Every day counts. Every step counts. Just remember that. Well, thanks for listening to this episode, and we will see you in the next one.